Hello, here in Singapore we are of course property crazy. The level of home ownership is very, very high compared to many other countries around the world. But it also means that some opportunities which you might not have the liquid cash for present themselves in markets outside of the home market. The question is, which one? Well, we've invited Charles Smethurst to come along. He's the Chief Executive of Dolphin Capital, visiting from Hanover, Germany, to tell us a little bit about what the property market there is like. And hi, Charles. You're saying that it's actually very different from the Singapore market.
Oh yeah, Germany is a very different market from many of the European countries, as well, of course, of a difference to the Asian market. So we have more a rental market than an ownership market. So basically 40% of our people are only owning property. For example, in Ireland, in England, you have more than 85, 90% are owners instead of rental market. In Germany, it's very much a rental market since many, many years, and this trend is also not changing. So it continue to be like this for many, many years, and it will be also for the future.
In Singapore, we always have the problem of not enough land. Prices are so well supported because there's simply only so far that you can grow and develop. That's not really the case in Germany, though, right?
No, I would say in Germany we have enough land to build property, but the problem is not the land in general. The problem are the city centers. So since a few years now, we really have a trend from the countryside to the city centers. So city centers, especially in the west part of Germany, are booming. In Munich, for example, which is the most expensive city we have in Germany, together with Hamburg in the north part of Germany, it's very hard to find, of course, land inside the city. And if you see the development of the city centers, we will have, in the future, we will have a lack of apartments in these city centers.
This problem actually started in early 1990 when the reunification happened.
Correct.
With East and West. The wall came down, lots of East Germans went across to West Germany. In other words, has that price curve of property actually fallen in those 20 years, or has it been a case of going up and up like it seems to be in Singapore?
Even in the crash 2007, the prices in Germany went up.
Really?
And I'm talking about the city centers, not about the countryside. Countryside is still very difficult. So you have areas, especially in East Germany, which are, I would say, dying. But the city centers are booming. And 2007 prices went up, where everywhere the prices crashed, basically. And that is very similar today. We have a European crisis, no doubt about this. And even though the property prices are booming at the moment.
Next question has to be in relation to the sort of capital appreciation that you can see. Because after all, a lot of people, sure enough, they buy property to live in it, but a lot of people also want to see the capital appreciation. When you say that prices are going up and that the market is booming, are we seeing 2, 3, 5% consistent increases, or maybe even 12, 15, 20% consistent increases?
In some of the cities you even see these figures which are unusual to German standards. So normally we are not selling because of capital appreciation, because our market is quite regulated, because we have a tenant market, we don't have an ownership market. And for many years it was very difficult, let's say, that you increase prices like this, so the market is controlling more or less by itself the prices. However, in the city centers, we have the situation like this, that prices are, especially in the last, I would say, 2 to 3 years, are booming. Because after 2007, when the world crashed, let's say the financial world crashed, people seeing that they have lost money with the banks, they have lost money in stock market as well as in the fund market. So they were not sure and they were lost confident. So basically the hope is going into property. And now if you ask people, more than 80% would say property is the number one investment model which we cover.
Really? So in other words, the prices can only continue to go up if the demand is like that?
In total, in general, we are on a very, very low level compared to other countries. So if you take London, if you take Paris, for example, then Berlin, for example, is on a very, very low level. So there is still room for improvement, I would say.
And you mentioned the difference between East and West, and that some areas in the East were dying still after all these years. But then again, in Asia, again, we look at Indonesia, for example, where for many years Indonesia was not an investment grade market, but actually it has grown very strongly. Could we see the same in East Germany, that yes, it is coming from much further behind the West still, but that is really where the growth is going to happen?
No, I think at the moment still we have a slight higher growth in the east part than in the west part, but still of money still went and is going to the east part of Germany. And there you find a sort of concentration of areas which are booming, which are doing quite well. For example, if you take a city like Leipzig, which is the capital city of one of our territories, they have an increase of inhabitants, and they have also an increase of the economy, stronger than what you see in other West German countries. But you still have a lot of regional problems in the east part.
Finally then, what is perhaps the 2 or 3 steps that you need to take care of, look out for, do, if you're looking at the German property market?
Well, first of all, you have to look to the location. Location in Germany, if you ask somebody what is the first priority for property, they will say location is the first one, second one is location, and third one is location. So, and that is the same also for investment. So our investment only goes to a certain part of Germany, so mainly into Berlin. Berlin is the hottest place for investment at the moment, also for foreign investors. There's a lot of room. The prices are still on a very reasonable level, I would say. And then we are investing in the south part of Germany. South part because it's a very rich part, or it's the richest part of Germany. We have nearly no unemployment. We have the high-tech industry in this area. A lot of big car companies like BMW, Audi, etc. are producing in this area. So these are the places where you, I think, as an investor should look at.
All right, thank you so much for coming in today. Charles Smethurst, the Chief Executive of Dolphin Capital. And for more information on Singapore Investment Week, go to the website on your screen now. Singapore Investment Week is on 25th to the 31st of August.